All right, welcome to this presentation. I will keep this as short as possible. I will show you in this presentation a growth stock, which fits the Canslim strategy. And it's a very proven strategy that is written by William O'Neill, which is a famous swing trader. And you probably, if you have been swing trading for a while, you probably already know what Canslim is, and you probably already know who William O'Neill is. So a lot of in this presentation will be you will be familiar with the terms I use. Okay, so I will cover the following. I will do a brief overview of the stock. It's a growth stock company that fits the Canslim criteria. I will show the revenue, EPS, and return on equity. And I will do a short technical analysis because it's on very interesting levels, in my opinion. So the stock I will cover is Pangea. Sorry, I don't really know how to pronounce it correctly. Pangea, whatever. Logistics. The ticker is PANL. So it's a shipping company that operates globally. The market cap is 270 million USD, so it's not really considered a small cap stock yet, but it's growing extremely fast. So maybe it's in a couple of weeks, maybe. All right, so here is the revenue and EPS. The revenue is up 53%, 107%, 105% in the last 3 quarters. And the EPS is up 240%, 100%, and 250%. So the numbers is speaking for themselves. Generally, you want to see revenue and EPS to be up at least 25% in the last quarter from the Canslim criteria, and generally for a growth stock to be considered a growth stock. But not only that, it overshoots it by far, and not only in the last quarter, but also in the last 3 quarters. So it's growing extremely strong, and has been doing that for a lot of quarters. And generally, you want to see a return on equity on at least 17%, and this stock is showing 26%. So that's really good too. All right, so move on to the technical analysis. This is the weekly chart, and this is forming a nice cup and handle. It's actually a picture perfect cup and handle. So it has a nice price movement up prior the cup and handle. It has volume spikes on up days, which is something you want to see. It means that institutions sorry about that, is loading up on the stock, and that's something we want to see, because the big money is moving the stock. That is not you and me. And the volume is drying up in the bottom. Something we also want to see. It means that it's not a lot of selling pressure, so the volume is really low, and then it spikes up in the up movement, and then you have a nice handle here, and the volume is also drying up in the handle, which is also something you want to see. So a very nice cup and handle. And we are looking at the weekly chart because that's what William O'Neill prefers in his Canslim strategy book, and I am not trading off my opinions, I am trading off facts, so I'm just following it. I'm also following the weekly chart and not the daily chart, so that is why. So generally there are 2 pivot points. It's when it breaks the handle, and this pivot point right here. But as you may know, the market environment is not really much in our favor, so I want to see a strong confirmation, and I want to see the price break this pivot point with a lot of volume, which is something we see here. The volume is picking up. So next week I want to see the price break this pivot point here and in a lot of volume. Then I will consider it a good swing trade. So the summary. I have done a short overview of a strong growth stock with strong fundamentals. It has a very nice setup for the technical analysis, which is a cup and handle. However, something we may want to consider is that it is a shipping. Sorry, I can't really speak tonight. It's a shipping company, so that means it's rather cyclical. So this is not something that I at least would have been holding for the long term. So if the stock is playing out as I hope, it's only going to be a swing trade. Alright, so thank you for that. I will quit this presentation right there. Bye.